Welcome everybody to WACKER Chemie full year 2022. What a year. It's been pretty dynamic. We've had multiple positive profit warnings. We ended the year with sales over 8 billion euros and an EBITDA in excess of 2 billion euros. We've never earned that much money. Our earnings per share were over 25 euros per share, resulting in a 12 euro dividend. This is a third more than we paid last year. In total, it actually means that when we pay out this dividend, we will have given back to shareholders 1 billion euros in just 2 years. Quite successful. What actually drove our results last year was largely pricing. Despite highly volatile energy markets and raw materials markets, we were able to up pricing and we were almost fully utilized throughout most of the year until the far end of the year when destocking started in chemicals. So pricing management drove up our chemicals EBITDA by over 45%. High polysilicon prices as people scramble to put solar installations in place benefited us. And on top of it, the restructuring program that we started in 2019 was bearing fruits. So we benefited from about 200 million euros in tailwinds from that. Sustainability, as always, is a big thing at WACKER. It opens new doors. It is a viable business proposition. 2/3 of our products are already compliant with sustainability guidelines. We actually were able to reduce our CO2 emissions last year alone by 11%, largely because we're using renewable power for silicon metal manufacturing and smelting up in Norway. And we're going to take that even further. We will replace the coal that we're using there as a reductant with a renewable reductant. And we're going to capture these CO2 emissions and turn them into valuable chemical products. That ultimately will lead us to have zero carbon silicones. But let's continue with the full year results for this 2022. So here you see the progression of our dividend payments. You see we're orienting ourselves since 2016 around a 50% payout ratio. And we just followed that. So you see here how much we paid out to our shareholders. Last year, we published our targets for 2030. At the end of March, we had a capital market day in London. And those were the key tenets here. So we promised to move faster, but make bolder moves in high profitability after we went through quite a sobering period of deleveraging and basically investing below depreciation. So we're back on the growth end, looking for an EBITDA margin in excess of 20% by 2030 and literally doubling our growth until then. But what's also important, and you'll find that in documents on the web, and I would encourage you to look for that. We've published how our ROCE has developed over the last years. You will see a ROCE in excess of 34% that we generated last year. Quite something. So the strategic growth projects that we're pursuing in silicones are largely on the specialty side. In polymers, we continue to build tandems, which means a liquid and a spray drying unit combined, which is the key to success here in this part of the business. BIOSOLUTIONS, what a significant drive into biologics. We are investing in a research center for industrial biotechnology at our main research site in Munich. And we are progressing with our contribution to the German Pandemic Preparedness Fund, where we will have a full mRNA competence center ready by mid-year next year. Obviously, that means there's a lot of upfront investment involved, but we'll get to this. In polysilicon, we're focusing on semi, and we continue to see stable or growing volumes despite pronounced semiconductor cyclicality. On the right-hand side, you see where the ROCE went in chemicals. It is pretty high considering the chemical industry. We're definitely in the top range of all these charts. So we'll see how this progressed. Last year was definitely an outlier, a successful outlier, but it just shows you what kind of potential this business has. Let's move on. So here you see an overview of all the major strategic investment projects. You see us expanding midstream in Burghausen and Inkwitz, downstream in India and downstream in Charleston, investing in Nanjing, in the world's largest spray dryer ever, and the BIOSOLUTIONS projects that I mentioned, and obviously also expanding our semiconductor exposure here, where we are by far the leading supplier of high-grade semiconductor-grade polysilicon. So going into the full year, looking for the full year 2023, because we know that's what you're all interested in. We now expect sales of between 7 and 7.5 billion euros for 23, with an EBITDA between 1.1 and 1.4. Not only do we show our confidence in our business by increasing our dividend to about 600 million euros this year, but we're also increasing our capex. So I think this is testament to the very strong confidence that we have in our positioning in this industry and our growth potential. Q1 update. Q1, as you probably heard from a load of other chemical companies, is rather difficult. Destocking isn't done yet. We basically see what were headwinds last year turning into tailwinds, but it still means that we're expecting sales of about 1.7 billion in the first quarter with an EBITDA between 250 and 280 million euros. Actually, chemicals EBITDA, if we adjust for some funnies that we had in the fourth quarter, it's going to be a bit higher. Polysilicon sees lower volumes as we have plant maintenance and as we are servicing our contractual customers with lower volumes as we are looking into new pricing mechanisms, more adequate pricing mechanisms for what we enable. So here you see the profit and loss. I think what's important to note is that we pretty much kept the gross margin stable despite a massive inflation in raws, energy, and the packaging materials, for instance, and logistics. EBITDA came in at over 2 billion euros, and you see down there how the net income developed. The key driver in all of this was literally price. Obviously, EBITDA increased by 35%. Some of that were trailing raw materials and inventory, but it's also a faster and speedier response to the changes in the market that was enabled by our restructuring. So WACKER has become a much more decentralized, agile, nimble organization than we were in the past. Looking at our balance sheet, solid as ever. Our equity has increased like over 2 billion euros, by over 2 billion euros to 5 billion euros. Pension liability is down, somewhat up versus the end of last year versus Q3 because of inflation, service cost inflation. But we're still sitting on 2 billion euros of cash in this, with a net debt of about 400 million euros. Now let's go into the segments. And looking back in 2002 here, but where there's also an outlook for 23. What you see here in 2022, in the fourth quarter, the EBITDA of 123 was buoyed by a 72 million revaluation of an equity joint venture in China. That means the net operating EBITDA embedded in this was just 51 million euros. That's a low number, but again, that reflects the massive deep destocking that we saw. No surprise, after nearly 3 years of allocations, when markets normalize, the whole thing gets turned back, and it gets turned back quickly. And that's what we saw. You see that we achieved a sales growth of over 33%. EBITDA grew even faster, even also when we adjust for revaluation thing. Most of it in specialties, largest profit contribution there, but standards became under pressure in the course of the last year to the degree that prices more than half compared to where they were at the beginning of the year. Now, if we look into 2023, we are looking at a minor contraction in sales, but the EBITDA margin will be significantly lower than what we saw in the course of the last year. And that, as I said, is a reflection of things just rolling back. You know, this is higher legacy inventory costs that worked their way through the system. We saw massive inflation in silicon metal in the course of last year, for instance. Commodity prices are down in the dumps. They're basically just bouncing off the bottom. And destocking is something that will continue into the second quarter. Considering such a weak first half, I think this is still a pretty good result. We see volumes increasing in specialties as we are commissioning new plants. And as I said, EBITDA is held back by these trailing raw material costs. So move on to polymers. Quite a success story here. In the past, this used to be a place where our margins were 1 year up and 1 year down. It just always depended on how well we forecasted raw material movements. We have, in the wake of all the volatility in raws and over the last 2 years, changed the pricing model here, and we have come to a much more frequent repricing of our products, and that results in a stabilization of our margins. And this is what you see here. So where despite massive increases in raws, the margin kind of stayed in the same corridor. We actually, for this year, expect the margin to increase a bit, as we have the reverse effect of an increase in raws. Now there's a decrease in raws, and with the time delays, it translates into slightly higher margins. Not much, but slightly higher margins. Let's move on. BIOSOLUTIONS. Difficult year last year, a year of transition. This year is going to be another year of transition. You know, we're in the process of building a bigger franchise here. You see the investments in 2022, over 100 million euros on sales of a little bit over 300. So we're massively putting our muscles into this, and we think we know why. We are hiring right now for the Pandemic Preparedness Fund. We are building left and right, and we've signed up a lot of new contracts. And now in the business model in BIOSOLUTIONS and CDS and CDMOs, typically you have to invest, you have to demonstrate your capabilities. And then you go into scale up. And once you've proven the qualities and the yields and scale up, that's when you get paid. So there's always a bit of a delay in this, quite substantial actually. And that means that the second half in this year is going to be significantly better than the first half. So let's watch out for that. Polysilicon for this year, as always, we're a bit cautious on our pricing assumptions, and I think that's well placed because there's significant capacity additions. That said, the market for polysilicon is very dynamic. The installations are expected to exceed 300 gigawatts this year. We had a very strong performance last year as a result of our continuous cost reductions and efficiency gains. And so for a change, we benefited from that last year. This year, it's going to get more difficult. We expect sales between 1.6 and 1.8 billion, with an EBITDA between 300 and 500 million. That reflects higher semi volumes, but we also have some plant maintenance earlier this year in Q1, so not full volumes like we had last year. This shows a cash bridge. You see the 400 million euros in net assets, and that we paid out 400 million euros in dividends last year. Here's our Q1 update. We talked about the 250 to 280 million. Silicones all in destocking, but sequentially better than in Q4. Polymers sequentially better, but held back by construction. The renovation markets are looking better than new housing starts, but it's still, the utilizations are lower than they were at the beginning of last year. BIOSOLUTIONS, as I said, a business in transition, and in polysilicon, sequentially lower because of significantly lower volumes, as we saw plant maintenance and as we have lower contract volumes in solar. That pretty much concludes it for the presentation for the full year 2022. Thank you very much for staying with me up to this point. I think it's fair to say that we've had a record year last year. It was quite an exhilarating ride. This year around, our virtues stay with us, our opportunities stay with us, the potential is with WACKER. It is difficult in the first quarter. There are some sprouts, some signs that it's improving looking into March, but we'll get there when we talk about Q1. So with this, thank you very much. And I'm looking forward to speaking to you on the 28th of April when we're reporting on Q1. Thank you. Bye-bye.